All right, we are live.
But throwing some jazz.
Um,
Jazzy jazz jazz. Live. I know we took took
all right,
a
we are
few
live.
lives off. But we are back. Jazz.
Back
Jazzy
in
jazz
here,
jazz.
back in here, Fleur East. Elegant jazz. You film Paris luxury bar ambiance. Vintage 1940s swing jazz. Listen to that before. Relaxing and romantic music. Set the mood, right?
You
That
said
says
something.
rain sound, cozy bar. I like that one. That sounds nice. Mellow jazz saxophone music and rain sound and cozy bar ambiance for stress relief and deep sleep. Got Paris in the background, feeling festive with the Olympics going on. All of lives. Returns.
I just entered a sale. Just because I have a 8 pip stop right now. 8 pip stop, about a 42 pip profit to my next decision making zone.
Hmm.
Really like that move there. Mentioned the dollar potentially moving to fill that imbalance. Um, so just I got my stop loss in, so just gonna let that play out.
Uh,
Let that play out.
oh, and ah, I'm locked up in positions right now on the short side. Entry right at about 2380. Um,
Nice. Okay.
just carrying through that really light brisk on that entry. So bearing through the waters of drawdown through the night. Bruv, why is this so loud, fam? Dang, no. Stop live stream. No, I don't want to do that. No, I can't figure out how to share my audio. Stop sharing now.
So be on the right side after
Yeah.
you hit share.
All right. I don't see it where it usually is. So my stop live stream, start focus mode.
What screen you looking at now?
Mhm. Just on the Zoom right now. I was looking at options and I was looking at just all the looking at the Zoom, the settings, like the audio settings. Bro,
Yeah, so when you hit like the share button
uh-huh.
in the middle, it don't pop up for you on the right, like
Uh,
under.
oh shit, sound. It says it's already sharing sound. Can you hear it?
Okay. Well, when it was played, I can hear it, but it's paused right now.
No. Yeah.
Yeah, I can hear it though.
I heard.
It
Yeah.
sound good volume, decent volume.
Yeah, it's about as low as I can get it, or else you'll be quiet for me. I bet, yeah, we can work with that.
Dollar's starting to move bullish right now. To feel some more of that imbalance. The
Put my
gold trying to manipulate me right now, but I'm not gonna fall for its games.
good.
Especially how
Um,
freaking
I,
bullish dollar move right now.
right. Yeah, I like the bearish play here on gold.
Hmm.
Let me see what gold market stocks under $5 to break out. Potential commodities fall, stocks nervy. It's the first time I've seen the word nervy in this space.
It's the first time I've heard of that word.
It's a little nervy.
Nervy. A little nervy. Stocks nervy.
It's a
Ahead of
Fed.
Fed.
Ah. Yeah, bro. I love us to
Six,
get down to like 2370. That's kind of that's my mark there. Um, hopefully we can get down there.
yeah, this article from 6 hours ago, Dow Jones Newswires, gold prices. This is just the headline: gold prices to find support from U.S. rate cuts. And so, if we're thinking about, you know, we don't like to, relate to the support and resistance, supply and demand on the chart, but in this light, um, this is one of those times it would be beneficial to understand, what support and resistance really is.
Right.
Because if we're thinking about resistance, we know that's when something can't go further.
Mhm. Mhm.
And when I'm thinking about that in terms of gold, I mean, knowing that it just hit its all-time high a week before, maybe a week and I think was it last week it hit its all-time high again? Or was it the week before that? Let me check.
I think
I think it was last week, wasn't
it
it?
was last week. It was last week, early last week. I'm pretty sure. I
So
believe
literally
it
freaking hits its all-time high a week before these Fed funds rates come out. And now this article is mentioning that we should find support, gold looking for support,
was.
or to find support, which means supports our positions, like the current positions we're in, but just thinking about the trajectory of what could happen to the price of gold. Um, I got a really, really clean area at about 2340. Um, it's an area that's a daily decision making zone for me,
Mm-hmm.
but right at that level, literally right at the same level, is also a very um, solid area, about 112 pips worth of inbounds that still has not been filled. So
Yep, I got that marked up on my chart actually as well. Uh, yeah, I'd love for us to get down there. If we get really good volume coming in, I'll trail my stop up until that point. I got that area 20 about 2348, and I haven't re-looked at it, but it should still be good. 2348 to about 2336, 2337. It's about a good, yeah, good 100 pips, 120, 130 pips of room there. Just in that imbalance in itself.
yeah, strong little volume try to creep in there, on gold.
Hmm.
Strong. It tried. That's that for that 1 minute. It just really shows. Um, the time frames are just super interesting.
Hmm.
They're just super interesting.
They really
'Cause to see the 1 minute acting like this, and then to go to the five, it it, it just makes sense. It just makes sense.
Yeah, it makes perfect sense. It makes perfect sense. Which, and the more where we're on the charts, and the more we, kind of figure out how to layer these time frames together, it just increases the value of our top-down analysis and the importance of our top-down analysis.
Yeah.
I think it's easy just to get caught and stuck in one time frame. For me, looking at all the time frames, it helps me, and we've talked about this before, but it helps me just expand my my concept of time when it comes to trading, right? And so, we enter a trade, for me at least, I've fallen in the trap, entering a trade on a lower time frame and thinking, I can only be in this trade for 5 minutes, 10 minutes, an hour max. Um, but utilizing our top-down analysis makes us realize, like, this thing is working on a 1 hour scale, a 4 hour scale, a daily scale, a weekly scale, a monthly scale. There's so much information provided for us on all those time frames. So if we just have support from, a handful of time frames, we can really sit in the trade for, at our own discretion, really,
Yes.
and let plays work out for us on various different time frames. Of course,
Yes.
that takes time.
No
Um,
pun intended.
right, right. But I think it's really important to expand your concept of time when it comes to executing trades and making decisions on staying in trades, holding your trades. Um, and you can throw the importance of risk management in there as well,
Hmm.
but it's super important.
Do you feel like time is faster or slower now that we've kind of like literally just sit here and watch minute by minute go? What would you say? You think you
Um, it goes by a lot faster. 'Cause I feel like I used to enter a trade and it'd be 5 minutes. I think I was in the trade for an hour. A lot
no?
of that has to do with just the emotional weight of trades, just how emotionally taxing it can be early on. Uh,
Mm-hmm.
we let it be like that oftentimes early on. That's all part of, just the few hurdles you have to get over along this journey, just building up the resilience in your emotions, and
Mm-hmm.
understanding of your emotions. Um, Pose your question one more time for me.
Just do you feel like as we've sat here and watched minute by minute, if time has slowed down or gotten faster
Hmm.
in
Yeah,
terms of just yeah.
yeah, I hear you. I appreciate that. I think my perception has changed. Obviously, time doesn't change its speed, but my
Yeah,
my
yeah, yeah, yeah.
my perception of the time during my trade definitely feels less taxing. Thus, it
Mm,
makes I don't get caught up in the minute by minute manipulation.
nice.
As Sir Raleigh says, the enthusiasm of the market that can lead to fleeting emotional feelings. Um, so for that reason, I enter a trade. I know my risk. I know the area or areas in which I'll look to make my exit either in profit or on the stop loss side of things.
Yeah.
So I think the comfort of knowing my trade parameters when it comes to my entries and my exit um, makes me just feel super comfortable when I'm in a trade. Right?
Right.
When I don't feel the emotional weight of the trade, so I can really just sit back here and relax. I'm not tense. I'm not tight. I'm not sweating, staring at my phone. I was in a trade overnight. I slept great last night. You feel me? Uh, wasn't too worried about it because my risk is okay. And I knew like max profit or max drawdown with the risk I'm doing now could exceed 300 pips if I let it. Um, and of course, that will always change. As your account size changes and as for different plays. Of course, we use dynamic risk. But on the specific entry, risk was really low, so
Mm.
comfortable kind of bearing through the drawdown. But just in
No, that's fire.
60 pips drawdown right now, so nothing crazy. I guess if speaking dollars and cents, I have about 380 in my live account right now. Drawdown about like 14 bucks, 13, 14 bucks right now. Maybe not even that much. But yeah. What about you? What are your thoughts on that same question?
No, that pretty much. Um, I definitely feel like it has. I I feel like it's slowed down for me.
Hmm.
Just especially that like 5 to 15 minute time frame.
Hmm.
Um, and kind of what you said about just similar to like being able to be in a position overnight.
Hmm.
Like that seems, depending on what time you go to bed, for 7 hours that you're not seeing anything go on with your trade, which
Hmm.
seems like a lot of time.
Hmm.
But as we just understand just how much like market information there is on every single time frame, and how as we increase in time frames, it's not only increasing the duration of that specific candle, but all of the volume, you know, just the information on that time frame is also increasing its value.
Hmm.
Um, so being able to stay in a trade for a day is like it doesn't even feel like that, because of that perspective that we have on the wider time frame.
Hmm.
Um, like I like to view my 8 hour a lot.
Hmm.
Um, and so, that's really only 3 candles a day that I'm looking at,
Right.
like for my levels. And so, by the next morning, I'm seeing the next candle finally first now starting to develop when we're getting on the call. Is it respecting my areas? How is it looking? And then I'm able to go down in time frames, based on which ones I need below that, and make my move off of that.
Hmm.
Um, but I just see a lot of people kind of downplay the value of being on the charts,
Hmm.
and it's kind of irritating just because the more comfortable you get with seeing these time frames and honestly watching that clock tick to zero, but not sometimes not seeing much movement in price.
Hmm.
And so, just seeing how price reacts to certain levels as it starts to move towards zero because of how important the closing part of price is.
Hmm.
Um, you just start to understand those little aspects, and that can only happen if you're live on the chart. Not even back testing. You can't even really do that back testing just because
Correct.
it's not real time data. You know what I'm saying? You gotta kind of go find, and then force yourself to think in a real time manner. But nothing like being on these charts. Um, so just to sum up the question, I definitely would say it's slowed down
Mhm.
for me. But I think in the way you put it,
Y-
it's we're seeing it in the same light.
For a
So
hundred, exactly, exactly,
yeah.
exactly, exactly, 100%, 100%,
Yeah.
100%. Um, God damn it, what was I gonna say? I lost it. But
I dragged on there a
you're
little
spot
bit. I'm
on.
sorry.
No, you're good. You're good. You're good. Uh, But you're spot on, and I liken it to, just like hooping. You know,
Yeah.
what makes pros, what makes elite players so great is their ability to slow the game down in their minds, right?
Mm.
So as you're going through that, that's exactly what I started thinking about. You can't, you develop that the game slows down for you just the more you play live.
Mm.
You can do all the drills in the world, and of course, as your skill develops, you'll get more comfortable on the court. So in tying that into trading, the more you do your research, the more you back test, the better you will get. But shoot, when it's time to strap the shoes on, throw the jersey on, or for us sit down in this chair, hop on a live call and trade, or for anyone not live streaming their calls, just sitting in their chair to trade. Man, it's that time on the live market that's going to allow you to build up just the comfortability and the ability just to slow down your mind, kind of consolidate the visual stimuli that's in front of you. Because like in trading view, there's a lot of things ticking. Like there's numbers moving, green, yellow, blue, whatever color your candles are is moving and taking. You got that dash bar across. You don't get that stimulation when you're back testing or when you're doing research. Like these are all little conditions, even the littlest things. But these are all things you experience when you trade live. Um, and to your point, Marcus, trading live allows us to slow the game down, which makes it so beneficial.
No, I love that you use that as an analogy. As the dollar is really nearing filling this entire area of imbalance.
Right there.
Um, I want to emphasize this happening really quick, just because I don't know if I don't see a lot of people teaching and guiding others on analyzing the dollar, just strictly the DXY. Um, and it is so valuable. This is a really good chance to practice identifying liquidity, areas in the market, where is essentially just money lying where
Right.
unfulfilled orders are.
Mhm.
So when we think of, price hitting our take profit, that's when you get that notification that says order filled,
Mhm.
right? So that means that trade is that position has been removed from the market. It's been filled, and now it's no longer in the market. So liquidity is literally the opposite. It's money, it's orders that are still holding its position within the market. Um, and so being able to identify that, and then being able to identify imbalance in areas of inefficient price action, something that we talk about literally every time we get on these calls. Um, you can really just focus on those two concepts, and then my personal favorite, I'm sure your favorite too, but decision making zones.
Yes,
So
sir.
those three concepts, just being able to use the DXY on those. And
Mhm.
why I'm saying the DXY is because it keeps you from, um, removes you from thinking about entries and exits, because you're not going to be doing that on the DXY ever.
Okay.
So you're really able to just truly, truly analyze this chart and analyze the price action. And then just kind of like what we were just talking about earlier, getting reps in on getting reps in on the chart, um, and slowing it down, being able to slow it down, and but doing it with the DXY to kind of remove you from thinking, did I enter right now? And just to remove that aspect of it, just so you can solely focus on analyzing structure.
100%. 100%. Yeah, but I got some more comments on that. I'm gonna run to the restroom real quick.
Right.
So I really like this. Really like this. I'll be right back.
Oh, I'm about to lose my chess game. Let me go make my chess move real quick. I got 7 hours. 7 hours. Why did I make that play? Like I don't know why I did that. I'm trying to play chess by the day. I was doing like 30-minute chess games, but and I started feeling obligated to just sit here with my phone open and play. And that's not really the type of approach that I wanted to have to this. I wanted to actually be able to take my time in my moves. I got 7 hours left, but I got that notification from the chess app saying, "Hey, you're about to lose." So I said, "Let me go take care of this." But I'm still in my position right now. Really, really like this bearish move here, this bearish play from gold amid you know news here in about 18 minutes. And QQ will attest to this. I'm fully bought in to this AI type of stuff to a certain extent. Um, to a certain extent, we had Google. Like people would use Google for everything. Um, Literally, I still use it for some things. Um, but with the emergence of AI, Google is like it's like if we're thinking like fast food restaurants, we're talking like Taco Bell. That's Google, and then AI is like Chipotle or Mascadores. If you guys been to Mascadores, that is a phenomenal place to eat, by the way. But that's in Arizona. I don't know if there's any other Mascadores not in Arizona, but everyone knows about Chipotle. So those talk about Chipotle is easy to use. Um, and the reason why this is a perfect analogy is because Taco Bell, they kind of just give it to you how it comes. You ask them what you want, and they'll give it to you how it comes. They'll give you a variation of what you're actually ordering, um, you know, because we know the type of food Taco Bell actually is not super authentic. Let's say that. Um, but then you got Chipotle, right? Who makes it fresh right in front of you, similar to AI. Right when you type in the prompt, it just makes it fresh, makes that answer fresh right in front of you, and then you can pick what you want really to come with that answer. You can take stuff out. You can add stuff, right? So AI is definitely Google on steroids. So I want to just as we continue to seek additional information, we continue to seek answers or structure or literally anything you would open that internet tab for. Start opening AI first, because the better we can get to use with AI, the better we can use AI, the better benefit it's going to be to us. Just like anything, the better we use things, the better it'll be for us. It won't be detrimental as it would for summers. But moving forward, the reason I'm talking about that is because um, one thing we can really utilize this for that I personally use it for is understanding the news and just the important information we want to pull from the news to understand how to react off of the news, right? We don't want to predict the news. We don't want to use this information to predict the news. We want to use this information to understand how to react. That's the type of trader that I want to be. I want to be a reactionary trader. I don't want to be a predictive trader or an assumptive trader. I want to be reactionary because everything is literally speculation. Um, so we have to be reactive. We cannot assume. Um, Now that's such a fine line because when we're sitting here talking about certain areas and certain levels and whatnot, we're somewhat assuming price to do a certain thing. But I can attest to this. I know Q can attest to this. We always understand that price can move both bullish or bearish, even if we have a bias, right? Um, but this S&P CS composite 20 HPI just sounds like a bunch of gibberish if it's me. So for it to not sound like gibberish, because I don't speak gibberish, I've never been able to speak gibberish. My sister was always really good at it, which always kind of irritated me that I could not speak it. Um, but anyways, understanding the S&P Case Shiller Composite 20 Home Price Index. That is actually what it all entails. But this is a year over year folder. And just I've been using Perplexity. It's a new AI platform just saw an individual using it off of YouTube when I was just looking up AI stuff. So I was like, why not? Let's try it, see how it goes. Um, but it says in an economic indicator that can affect the US dollar's value, here's what you need to know. It's so clean and structured. I don't get lost in all these freaking links on Google. But it says the index measures the change in selling prices of single family homes in 20 major US metropolitan areas. Just off of that alone, now when I see this freaking folder on Forex Factory, I'm not just super confused because of all these abbreviations. Like now I know that 20 means 20 metropolitan areas, 20 major areas, and I know it's measuring the prices of homes, selling prices of single family homes. But the second bullet point here, you guys can't see my screen as I'm highlighting it like you can't see my screen. Um, but it says a higher than expected reading is generally bullish for USD, while a lower expected reading is bearish. Which that's the basic information that Forex Factory gives us. Which okay, it's super easy to understand that. But then it says this is because the rising home prices often indicate a strong economy, which can lead to expectations of tighter monetary policy. Now we're starting to get into the juice of why this folder has any validity on the value of the fluctuation of the US dollar. Um, so yeah, as we move closer to news here, I know Q had a thought, and I don't want him to lose it as I'm continuing to talk about this. So I'll try to come back to it, but just understand that right there that the rising home prices often indicate a stronger economy, which can lead to expectations of a tighter monetary policy. If you still remember your thoughts, Q. Oh, wait, he's not there anymore. I thought I heard him return, but it's all good. That means I can continue. Um, and so there's another bullet point here I want to talk about. Da, 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 da. All right, market reaction, right? And it gave me these responses because of my prompt. I said, give me everything I need to know I just copied and pasted the folder, right? Can affect the price of the dollar. On the release of this news folder is an economic indicator that will bring immediate volume or delayed because I want to understand how I should react once this folder does come out. Like I want to know what my leeway is. I want to know how I can utilize this folder. So number 3 says market reaction. The release of this data can bring immediate volume to the Forex market. Particularly, that's a very tough word for me to say. I really hate that word. I don't hate it. I'm not going to say that. I really dislike that word. Um, particularly particularly, there it goes. Let me restart. The release of this data can bring immediate volume to the Forex market, particularly USD pairs. However, the impact may be moderate compared to other major economic indicators. Okay. Why does that matter? I just love this. Why does that matter? Because we have two other folders at 7 p.m., 7 a.m. Consumer confidence and JOLTS job openings. Two high impact folders, right? So about an hour before we have high impact folders, we have a folder that, according to, some, hopefully, as we get here at the top of my screen, verified sources from, Perplexity, um, we get from them that even though this folder should have immediate impact, it may not impact as heavily as some other major economic indicators. Um, so this is kind of where we have to be really discretionary in our approach, because if we solely focus on this 6 a.m. folder and the data that it gives us, and we completely undermine the possibility of manipulation because of we have two more high impact folders at 7 a.m., right? Just brings us back to why me and Q, we spend a lot of time talking about, these macroeconomics, and just the importance of them. Um, so yeah, now that he is back, I want him to talk about, the thoughts that you said you were gonna hold on to.
Mhm. My fault. My pops gave me a quick call, so I was just chatting with my pops for a sec before he started his work.
Mhm.
Um, and we were talking about, oh my
We're
goodness.
talking about the DXY. I'm just analyzing. I think that's what I think we're talking about.
Mhm,
Just using
mhm,
that to analyze price,
mhm,
it being a currency, something we can't execute on, of course. Um,
mhm,
so we're moving us from that.
mhm, mhm, mhm. Yeah, and I really like, and my thoughts will continue to come to me as we progress on, of course. But um, in terms of the DXY, it gives me comfort. One, and you mentioned this, that it's not something that's traded. So how do I want to frame this? Um, it's really just it's just information, and one of the most valuable resources of information for us. Like, yeah, it looks like all of our other charts. It looks like XAU USD. Just as far as like its chart, it's candlesticks. We have the same indicators on there. We mark up our DMZs. We mark up our inefficient price, levels of liquidity. But it's not something that's traded, and it's something that is really just information for us. And again, one of the best means of information for us as we trade in a U.S. dollar involving pairs. And I almost look at it as a consolidation of all of our other resources, especially all of our other macro resources, like our news, um, yeah, our news and everything that happens on the macro scale. The DXY is the representation of um, macroeconomics in the United States, which is nice. And I think when you kind of can consolidate the DXY, when you look at the DXY as that, it kind of simplifies all of our other resources. It kind of ties it all into one. Um, and so as we do all of our macro research, as we look at interest rates, as we think about interest rates, inflation, and things like that. Um, That yeah, understanding all that is vitally important in terms of kind of gauging what's going to happen. But I find comfort in knowing that whatever happens will be clearly represented to me on the dollar, on the DXY chart. Yeah, as news approaches in 3 minutes, right? Oh no, yeah, orange folder, S&P SC Composite 20, 3 minutes, 5 seconds. Actual greater than forecast is good for currency, so we'll be looking at the actual data that's presented to us when this folder drops. 6.5% is the forecast. Previous folder dropped 7.2%. So previous folder, previous S&P SC Composite 20 HPI year to year um, did drop greater than forecast, meaning good for currency. So I look to possibly find the same result here. Look for the same result here, continuing to push the dollar bullish. Um, but yeah, I really like what you said, Mark. I think I caught a little blip of that when you're talking about there's the 6 o'clock news, and as we move to the 7 o'clock news, and as we just think about news in its entirety, right? And we talk about expanding our how we perceive time on the charts, expanding that out, um, in understanding the whole story. I guess the macro story, over time, the macroeconomics isn't it's not specific to any day or time period. Like this is just it's everything. It's the world we live in. These news folders are going to continue to come. Impactful global events are going to continue to come. Um, yeah. So it can you can get kind of jumbled in the midst of news and kind of get confined to oh shoot, I got 7 o'clock news.
Yeah,
I gotta either watch out for this news. I gotta make this play right now because of this news folder. Let's pump the brakes a little bit because there's gonna be some more folders either that day. There's gonna be impactful folders tomorrow, the next day, the day after that. And so understanding what each individual folder is and will do is important.
yes,
Um, but expanding upon just the day of news or just the week of news, and here I'm speaking to just the importance of understanding macroeconomics and what's going on in the world, which that empowers us um, to again expand our perception of time and make highly informed decisions.
yes,
That won't necessarily be the quote unquote right decision right now or in the next 5 minutes or the next hour. But in the grand scheme of macroeconomics, in the grand scheme of global news, global events, um, we're able to kind of get the whole story as we expand our perception of time.
absolutely. As news just released here, let's see what we got. No, and to your point, we literally just I was walking through, and something we've mentioned, probably this is the third maybe call in a row, just how we utilize AI
Mhm.
and a, a, the efficiency that has actually increased for my when I go into my research is so beneficial. But for the specific folder, it had mentioned that the release of this data can bring immediate volume to the forex market, particularly USD pairs.
Mhm.
However, the impact may be moderate compared to other major economic indicators. Um, which that alone was literally the reason why I was going into that, 6 to 7 o'clock, just because um, we could get, like, right now we get bullish news on the S&P, which can reflect on the dollar, but then we could get just crazy bearish news on these next two heavy folders at 7 and completely change the direction
Sure.
of what could happen with the dollar. So, um, but that was fire. You caught a good snippet to be able to understand exactly what the heck was going on.
Yeah, but and as I mentioned a second ago, actual greater than forecast is good for currencies. Marcus just mentioned this news folder opened bear or dropped bearish for us on this S&P folder. Actual is 6.8% to the 6.5% forecast. We'll be really interested to see how those 7 o'clock news folders come out. Um, uh,
Yeah,
CB consumer
yeah,
confidence, job openings, two folders we see a lot. Two folders that we know to have massive impact on the market.
yeah.
We're gonna see both these usual effect actual greater than forecast is good for currency. Sometimes that will change. I feel like most of the time it's actual greater than forecast is good for currency. There's some folders where actual less than forecast will be good for currency. So I think it's important to kind of just pay attention to that usual effect and make sure we're an understanding of what actual is in respect to forecast and how that um, will impact currency. So I just wanted to throw that out there.
For sure.
It's not always actual greater than forecast is good for currency.
That's a very important detail right there, honestly. I'm curious to know if, because you know how some of the folders say like quarter to quarter or month to month or
Hmm.
year to year.
Hmm.
I'm curious to know the ones that don't say that.
Hmm.
How and what is the timeline that they base their data on? Like as I'm just sitting here looking and thinking about, because the folders that like this consumer confidence, it looks like this one releases every month,
Hmm.
but it's not a month to month folder. Like, is am I just being too like tedious and wanting to see that M to M? But I feel like in something like this, I'm not, and it should be very specified.
Hmm.
Um, if it is a month to month folder, if it is a year to year folder, of course, it's not going to say if it's a weekly folder like unemployment claims, but that I'm kind of curious to know if it does take its previous month's data or if it's a blend of previous months, predictive results of these folders. That's interesting.
Hmm. And this website I expanded out on um, the consumer the excuse me the CB consumer confidence folder and I went to the CB website the conference board incorporated website. This thing's fire, dude. They have this little section called Economy, Strategy, and Finance Center. And so
Okay.
they have various different options you can click through and kind of dive into. I'm gonna click on a couple of these. I haven't gone into it yet,
But
but the global economy, consumer dynamics, labor markets, energy infrastructure and environment, finance
mm,
risk strategy, productivity and trade, data central. There's a lot of information in here
mm,
actually. I'm gonna favorite this website. I put it in the Zoom chat. Excuse me, in the Zoom chat.
nice. Uh,
Uh, for anybody watching this or who will watch the recording on YouTube, um, gaining access
mm,
to getting into our Discord and here, this is an invitation to our Discord. Um, but being in the Discord allows you to be on the live calls, to join in on the live calls. And of course, I saw you, Joe Penny, hop on here with us. It's always great to see
Joe,
your name pop on here with us. I appreciate you being on here with us.
for
Uh,
sure.
Mr. Joe Penny is more than welcome to turn on his mic, turn on his camera. Yes, as we conduct these live calls, we want to have as much open discourse and dialogue as possible, um, and answer any questions as possible. So joining the live call, watching live call on YouTube is great. Very free, very good way to gain access to our live calls. But being in our Discord and joining through the Zoom link that we provide in our Discord will allow you just to be a little bit closer to us, if that makes sense. So I just wanted to throw that out there as well. Let's take a global economic outlook, more insight from what's ahead in the global economy. Economic forecast for the U.S. economy. U.S. economy is expected to lose momentum in terms of high prices, elevated interest rates. And I love just as I work through these resources, just all these concepts starting to make more and more sense, if that makes sense. Um, and just really being able to just put everything into just one box. Um,
100%, bro.
that makes
I mean,
sense.
as I'm sitting, I'm literally reading the same. Oh wait, no, I was reading something else. Um, what was the one I was reading? I was reading one under the U.S. Consumer Confidence weakened slightly in June. It
Mm.
was like the last. It's crazy how it's possible to find. This is a really fire website, by the way.
Yeah, it's fucked up. Comprehensive database with annual data covering GDP.
So, meanwhile,
Yeah, no, it's just fire. I like this a lot. I like this a lot. Data economy database.
and so just thinking about why this matters, why I personally think it matters.
Hmm.
The more insight we can get to how people think as a whole,
Hmm.
um, on in their own aspects. Like I want to understand how consumers are thinking, and I want all information to know how consumers are thinking, and then I want all information to know how institutions are thinking.
Hmm.
And that's exactly what these macroeconomics provide for us, hand in hand. Like I'm sitting here reading that, food and gas prices continue to impact consumers' views of the economy,
Hmm.
and just something like that, just understanding that we all notice it,
Hmm.
but to understand that the entire world as a whole is also like keen to what's going on, and that it shows in the data. Like it said, average 12-month inflation expectations ticked down slightly. It was like 0.1%. But
Hmm.
just to understand this data, get the data, and then figure out what it means, how we use it, and how we can apply it, um, to the chart. And something that I've come across recently, well, I won't say come across recently, but spent more time on understanding recently is the consumer sentiment,
Hmm.
and the this just the sentiment of these pairs and stuff like that. And basically all I think it means and how I interpret it is, it it's either it's the favored position. Like people are either favoring sells or favoring buys, and it gives us that data and that feedback. If we use, actually, I think it's my FX book daily.
Hmm.
Is it my FX book? Yeah. So
Hmm.
my FX book gives us a forex sentiment, and it literally gives us symbol popularity, community trend, um, and then we can use this data, compare it to the macroeconomical data, take that data, compare it to our areas of imbalance, where are our
Hmm.
liquidity areas at, what time frame are we viewing. Like it just all starts to piece together, and then we feel like Thor. and then we close our fist, and then our hands light up because like I really feel like we have a really some people get into overanalyzing. I can attest to that. I've definitely overanalyzed in my past in trading. Um, and so if it ever sounds like there's a number of different aspects that we talk about, I mean, there is. Um, but I think the wide range provides a really, really clear perspective on how we can approach these markets.
Certainly, and it's certainly not something, especially at the macro scale. We won't be able to understand everything in one day, in one week. And I think how we've been kind of approaching our markets, and tell me if I'm wrong, is just kind of taking little bits at a time and investing in just the continued education, the continued investment into understanding the macro side of things, understanding global economics, even outside of the United States. Of course, we're primarily concerned with the U.S. economy, as we trade U.S. dollar involving pairs. But as we know, as we've come to learn, the U.S. economy is not just the U.S. economy. The U.S. is so intertwined with global economics. Of course, the U.S. dollar is king, and should remain king as we progress as we progress forward through history. I'm very Marcus. What are your thoughts? And I wanted to do some research on this, but I've seen some little tidbits of China and Russia moving away from the U.S. dollar.
Yeah, I remember that was what Crypto Reach had brought up in our Discord.
Yeah, yeah.
Um, whenever I see stuff like that, it's kind of hard for me to get behind that being the like that being what is actually going to happen.
Hmm. Hmm.
Just because I feel like, and I am so far away from politics. I'm not gonna say that. Um, I just don't really spend a lot of time on politics. But from my brief knowledge, I don't think we had a great relationship with China while Biden was in office.
Hmm.
Um, I think like I said, removed from politics, I have no opinion with either one of these individuals. But from my understanding, Trump had a lot better relationship with China.
Hmm.
Um,
Certainly.
and that's actually something that's mentioned in, I think it was the Trump 2.0 or whatever we were talking about the other day, and the foreign relationships,
Hmm.
that he already has, because those people trust him. And for whatever reason, like I said, I don't really care. Um, but that aspect alone, I don't think I could see that happening just because, we can all probably predict that, that'll be the new president come, the fall, winterish time. Um, and like you said, the dollar has been king for, as long as I've been alive, and, as long as a lot of us have been alive. So before that, it was gold. You
Hmm.
know what I'm saying? So just to think about, and what something we just discovered the other day about gold, China being one of the largest, manufacturers of
Global.
gold, and gold being directly tied to the US dollar. Like, so off those two alone, I
Hmm.
would probably just say it's maybe just something to throw out there, to get people to affect the market.
Hmm.
Um, And now, of course, I could be completely wrong, and then we could come down in a year and nobody's using the U.S. dollar. But that's just kind of my outlook on it.
Hmm. 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 Yeah, I'm right there with you, and I want to get back to what was going to happen in November, December, and January when the new president um, gets into office. But you brought up the the gold market. We were doing some research yesterday, or was the day before that? I forget. But we learned exactly what you just brought up, and how China is the big player when it comes to gold specifically, right? And how obviously we know how intertwined gold is um with the US dollar. And so that aspect of China being heavily into gold in the gold market makes it hard for me to think that the US dollar will um, kind of leave the Chinese market, if that makes sense, especially in terms of the pair that we're trading. Um, but yeah, we'll see. We'll see. And come November, I think the one of the one of my big takeaways or reflections, um, with former President Trump, Mr. Trump, is his relationships with China and Russia. Um, and I'm like you, Marcus. I do want to get into politics more, not for the reason of developing strong political positioning, left or right. I'm somebody that thinks that I've I feel strongly that 95% of people um, live within that middle quartile of political views. 95% of people aren't too far right, aren't too far left. Most people are right dead smack in the middle. Either, they might be more left socially, more right economically, or vice versa. You kind of top wage all that together, and you find that most people kind of just sit smack dab in the middle as far as um, views go socially and economically. Um, but yeah, definitely, especially as we progress through this industry and as we learn more and more, politics inevitably affect the financial markets. Thus, I think it's important to at least be aware of what's going on. I think that's the takeaway here.
Sure.
A little bullish push, a little bullish volume coming in on gold here.
Bulls. It um
Quick rejection just reaches a pretty strong level here.
yeah, I was over here looking at, hold on, let's see this real quick. I am not a US resident.
The feds are gonna come knocking at your door, man.
Show. So, dailyfx.com 15 minutes ago just came out with a sentiment analysis, right? So, sentiment analysis on gold, oil, and USD JPY positioning. Specifically, I care about gold.
Mhm.
Says gold analysis of retail trader. So important, that word. So
Mhm.
important, that word.
Yeah.
Analysis of retail trader positioning indicates 56% are net long, which means they're buying. 56% of people are buying. I don't know if that means they're currently buying, they're thinking about buying, they're wanting to buy, or they've already bought. I don't know. Um, with a long to short ratio of 1.28 to 1. So basically every 1.28 people that are buying, every one person selling.
Mhm.
Net long traders have decreased 2.47% since yesterday,
Wow.
3.96% since
Uh-huh.
last week, while net short traders have increased 7.34%. since
Inter-
yesterday.
Interesting. That's a big percentage.
That's a big percent. And
Big
then, but it
percent.
also says, peep this, but decreased 4.98% from
Mhm.
last week.
Interesting.
So, and then just we can literally just take that alone and take this to the charts. I would want to look at my weekly, which I'm going to do now, and see why. Um, of course, let's see, what did it say again? See why traders from last week decreased how many people were selling, right?
Mhm.
But the reason why I said retail traders are so important because a lot of people trade retail chart patterns. A
Mhm.
lot of people like just that aspect of it matters so much. And I'm over here yelling, and I'm probably gonna wake up my little girl. I'm gonna be pissed.
Mhm.
Um, but if we have access to the information of what retail traders are doing, the people that actually, are signed to these, 10-year, 5-year contracts, at Morgan Stanley and Goldman Sachs and, these financial institutions,
Mhm.
they have this information as well. Um, unfortunate thing for retail traders that institutions have over every single retail trader is volume and the
Mhm.
amount of influence they can have every time they put a position into the market.
Mhm.
Um, and one thing that I'm probably like 98% sure that no institutions do is market execute. Everything is a stop order, buy order, stop, sell, stop. If you guys are familiar with those trading terms. Um, but what it means is they just don't, they're not sitting there in front of the computer, pressing a button and entering a position. It's more so price will hit a certain target, like
Mhm.
a price will move to a certain, price. Like let's say it moves from 23.92, what's gold's at right now, and it moves to 2400. Right when it hits 2400, a position will enter, and they'll already have it set.
Mhm.
Um, and why that matters to me is because they can also read support and resistance, decision making levels. They can also read imbalance. They can also read these areas and trend lines. They can also read that stuff, so they know. And that's why we've talked about it before in the past. But institutional numbers, those really clean numbers of price, not like a price that we're at now, like 2392.95. I mean like a 2400, right?
Mhm.
Or 2350. Like just those clean prices.
Mhm.
Those are those institutional numbers, and that is where we normally find decision making zones, imbalance, and liquidity. It's literally like it it's like so beautiful when it lines up like that. I get amazed, and that's why I relate to trading as art, and that's why I also think I'm part crazy about that. So,
Mhm.
but
No,
yeah, it's
certainly, certainly, certainly.
gold still moving bullish here. I'm still in my position. Let's see. As we, you know, just talked about imbalance. 15 minute I'm looking at right now. On this most recent bullish move, there was some imbalance created. Given that we do have news in 35 minutes, just a really, really easy area for price to come correct towards, or for just a really, also just thinking about an area that price is leading behind to return to. Um,
Mhm.
and so manageable risk right now for me in this entry. So I'm not super concerned. I'm in probably about decent sized drawdown right now, probably like 70 pips. Let's see. Yeah, just around 70 pips of drawdown right now.
Mhm. Mhm. Yeah. And maybe at this point it's naive for me to think this, but as we continue to do more and more research, my opinions will be more profound. Um, I just like to see the dollar gain strength over the next couple weeks, um, and see gold, see XAUUSD move away from this all time high area because we're still relatively close to that all time high. Right now we're sitting at 19 or excuse me 23.94, 23.95. All time high is about 24.84, 23.84 or 24.84, excuse me. I mean, yeah, that's a lot of room, but just in the grand scheme of gold and grand scheme of price, we're still really, really high up here. So yeah, it'll be interesting. It'll be interesting to see where we go from here.
And I was looking at that article on DXY. There's like 17 minutes ago, says the dollar could rise if rate cut bets are scaled back after Fed decision,
Mhm.
which is tomorrow. So I don't think the final decision is tomorrow.
I wonder when that decision's coming.
Well, that CMEgroup.com. I'll put this link here in the Discord or in the Zoom. Oh, wrong link. Into the live.
According to AP News, as recently as last month, Fed officials have collectively forecast just one rate cut reduction in 2024 and four in 2025 and 2026, suggesting they lean towards a more measured pace of cutting rates about once a quarter.
Hmm.
Interesting.
Yeah, look, thinking of this tool, there's so J July 31st is actually one day they'll make the decision. September 18th is the next day.
Mhm.
November 7th, which when's the election?
November.
November 5th. Sheesh. November 5th is the election. November 7th is a day that the Fed will decide to either cut the rates, increase the rates, keep the rates. And based on this Fed Watch tool from CMEgroup.com, uh, right now, for the decision tomorrow for the Fed to cut rates, it's about a 4% chance that they'll cut rates. Um, so 95.9% chance that they will keep the rates the same as they're at now.
Mhm.
That number goes down by about 6% for September. And these are all, I think these are all speculations, of course.
Mhm.
But this type of tool, I'm sure, has strong uh, consideration for coming true, coming true.
Mhm.
And then the one on November 7th, it ends up dropping crazy. So literally 2 days after the election, they basically say there's a 60% chance that the rate cuts will drop um, by about, let's see. So it's going to go from it's sitting at 5.25% right now to 5.5%. It's going to drop to 4.75 to 5.0%.
Mhm.
And what the interest rate is, Q, you talked about this a little bit earlier, doing our research in um, Just not. You talked about this the other day too when you're over here looking at 100 rocks.
Hmm.
Love that analogy. Just literally can relate it to a lot of things. And this news is one of those things. If we look at every aspect of macroeconomics, we're looking at 100 rocks and trying to, you know, observe them all and understand them all. Um, being that we are moving closer to this election, being that there has been a lot of talk around these rates and whatnot, my main um, focus has really just been interest rates, and just diving into every little aspect about interest rates. And I literally finally understand that it just has to do with overnight borrowing.
Hmm.
It has to do with overnight borrowing, and that is what the rate fluctuation is. So when we're talking about 5.25% to 5.5%, that is just the increase in the loan cost over time, right? So
Hmm.
that is and that's what the banks have to pay back to each other as they borrow from one another, right? That is what that is. That is what the from what I'm understanding more and more about the interest rate. Um, so that's my TED talk for today.
Hmm. A rate reduction this fall, the first since the pandemic, would amount to a momentous shift and a potential boost to the economy. Fed rate cuts over time typically lower borrowing costs for such things as mortgages, auto loans, and credit cards. Interesting. Interesting. I really like you brought up the rock analogy. And that it certainly applies to this macro stuff in global economics, right? And the analogy I proposed is um, what we were talking about. We were talking about steadying,
Yeah.
and how we steady. And I guess you know that's not just applied to academic study and academic discourse, but it applies to this research as well. And so the analogy that I used is, and I'm gonna tie it in. I'm gonna frame the analogy how I framed it the other day, and in terms of how I study and how I approach studying, and expand my perception of time when it comes to studying, in itself. So so if I have a test approaching, um, big test, big biochemistry test, something like that. If I wait to study, till 3 days before the test, I'll have an abundance of information to look at. And so this is the 100 rocks. So in 3 days, I have to make sense of 100 rocks, and they're just 100 rocks. There's no organization to it. There's no kind of systematic approach to understanding all of this. However, if I know I have a biochemistry test in 2 weeks, I'm gonna start looking at all the information and slicing up that information over the course of that 2 weeks, the entirety of that 2 weeks. So that 100 rocks of information, that 100 rocks, you slowly start to, you find a group of 5 rocks. All right. And then, you find another grouping of rocks, 25 rocks that are kind of similar that you can kind of dive into those 25 rocks. Then, you have another, 10 rocks. But here you're just able to kind of cast and sort this information systematically. The more we research and the more we invest into the studying. Um, and so when it comes to this, when it comes to researching macroeconomics and understanding um, how that impacts the financial markets, if we have to develop kind of a systematic approach to understanding all of this. And here's the main point: it just takes time. It takes time to kind of sort through all this stuff and figure out the real story, and how that story is going to impact the financial markets. um, so just looking at one article um, isn't going to get it done. doing your research maybe at the beginning of the month or you know sporadically. If we approach it like that, we're not able to kind of categorize our 100 rocks. We're not able to categorize all the information that we have and make sense of it. But if we stay committed and stay invested into the research, we'll really we'll very quickly, and I think we can attest to that in just the growth we've made in our understanding of all this, over the last couple of weeks. Um, but if we can, just stay committed to doing this research and just kind of tracking this stuff over time, it all starts to make sense.
Volume times time.
Volume times
Volume
time.
times time.
Volume times time. The golden equation.
No pun intended about gold. Justin on this
No.
morning. Justin, what's going on?
Big
Good
man.
morning.
Good to,
Great morning.
Great morning. Great morning to be on the charts. Appreciate you, Joe. Appreciate you, Justin, being on here with us live and in the flesh.
We're gonna make sure my little girl's still breathing.
Always got to check. Always got to check. Yeah, gold kind of at a standstill here at 23, this 23.92 to 23.94 area right here. Big news coming in about 22 minutes. So that'll definitely give us some chart action, for sure. As we said earlier, we got here I have November 5th pulled up on my news right now. Let me get back to the present day. There we are. Today is Tuesday, July 30th. CB consumer confidence, jobs opening, red USD folders. We'll be dropping here at 7 a.m. PST. So sitting here right now, I'm interested to kind of see some manipulation that happens before these news folders come. Maybe some pre-news some pre-news volatility. I was gonna say validity. Of course, it's valid. But just some pre-news volatility. We'll be interested to see that. That's what I'll be paying attention to over the next 20 minutes or so. Then of course get prepared for these news folders to drop and observe them.
I feel like that's exactly what we're getting right now is that pre-news manipulation. That pre-news manipulation. Just, I mean, bullish news on that S&P, but um, let's dive back into that website you posted. I want to pull back up that consumer confidence that I was reading because that's the folder that we're waiting on today is consumer confidence and JOLTS job openings. So whatever data information we can understand, insight, whatever we can gain about those two specific things right now in this instance, um, gives us the chance to understand how we can react when those folders come out. Let's see. November 5th, though. I see what you're doing there, looking at that date.
Yeah. That's gonna be an exciting week, man. That's gonna be an exciting week. My first presidential election trade as a trader. So that's gonna be a really
We're
interesting
loading the
day.
lots. We're loading the lots that day. We're
We're
loading
loading
the
the
lots.
we're loading the lots, bro. We're loading the lots. Throw it all in there,
I'm
man.
putting the stop loss in. I'm letting it go. It can either go one of two ways.
Right. But what
Oh
I'm really
shit.
interested in, maybe even more so than that specific date, is what's gonna happen between so November 5th, November 7th, and January 1, when the new president steps into office officially. Um, Potential, yeah, it'll just be those couple months. I guess 2 months will be interesting. will be interesting. I wonder if we'll kind of have some strong trajectory one way or the other during those 2 months, or if it'll kind of take time for um, some things to kind of come to fruition and cause some drastic impact on the U.S. dollar on the DXY. Ooh. I have a decision making zone right around 2400. I guess with the impending news, we'll if it's gonna turn bullish, it'll blast right through that DMZ. But just want to notate that there is an area of inbound sitting right above us, about 2400 to 2413. That price could look to get through. Of course, there's liquidity, and as we said, I always love to emphasize that there's liquidity and there's inefficient price everywhere in the market, bullish side, bear side, and it's on us to kind of read the momentum and understand the macro and determining which area is price is going to move to most likely. We're not nobody's a master trader. We're all just predicting what may happen, right? Nobody knows for sure. That's up to conspiracy and speculation. That statement there, but um, like I said, it's on us to use our tools and use our knowledge to understand which area is going to be filled and when. So I just want to emphasize that point.
Absolutely. I put an article in the not an article, but the website from Zoom
Mhm.
in Zoom. Um, Go open that up for me real quick. This is really interesting as we're moving towards this forex, this consumer confidence news. Scroll down some more. Keep going, keep going, keep going, keep going, keep going. Right here. So go up a little bit. This is a little bit more, a little bit more. It's literally telling us right here the present situation of basically how consumers feel.
Mhm.
So the consumer confidence. Um,
Yes.
you know, 19.6 of consumers said business conditions were good, down from 20.18 or 20.8% in May. So there was a slight drop there. 17.7% said conditions were bad, also down. 12.6% of consumers expected more jobs to be available.
Uh-huh. Yeah, I wonder the statistical correlation between businesses saying conditions are good versus businesses saying conditions are bad, because both decrease. I feel like if you look at that logically, one should decrease and one should increase. Um, that's interesting.
Yeah, then we got this like graph here, um, which kind of shows the present situation index and then the expectation index, and you see just how far off the present is from the expectation.
Mhm.
Um, but we understand market structure, so we understand something like this. I can see I mean, well, just thinking about it logically, either one or two things has to happen. Expectations have to move closer to the present situation, or a present situation has to move closer to expectations, similar to how it did in the past on this graph.
Mhm.
Um, So yeah, I just wanted to bring this one up just because it was literally directly correlated to what this news folder was going to be about. Consumers assessment of the short-term
Yeah, that's
labor market outlook. Are you
exactly what
reading
I'm.
that?
That's
Oh.
exactly what I'm looking at right now. Go ahead. Go ahead. Walk through it.
Well, the consumers' assessment of the short-term labor market outlook was a tad less negative in June, which they means the confidence rose about the short-term labor market in June.
Hmm.
Um, 12.6% of consumers expected more jobs to be available, down from 13.1% in May. 17.3 anticipated fewer jobs, down from 18.8%. So the people that thought there would be fewer jobs decreased. The people that thought there would be fewer jobs decreased. So the people that thought there's be more jobs increased. But they both decreased from their previous month. Interesting.
Hmm.
Interesting.
And when it comes to data in general, I always like to understand where just various entities. So in this case, the conference board, love just to understand where they get their data from.
Mm,
So the conference board, the website, Marcus and I are walking through right now, um, is an independent nonprofit organization. Sources data from different sources, including government agencies and private organizations, including but not limited to government agencies. So the Bureau of Economic Analysis, Bureau of Labor Statistics, and the Federal Reserve Board, and private organizations, including but not limited to the National Association of Purchasing Managers, the Commodity Research Bureau, and the TCB's own Consumer Research Center. So they are doing their own research as well, which I like. Which I like. They're not just weeding through information. They are in fact doing their own data research on top of um, the the um, the government agencies and private organizations in which they retrieve their data.
no, that you being a scholar, uh, that's highly important.
Well, yeah, man. When we're at the end of the day, we're all scholars. We're all scavengers of the
Uh,
natural world, and it's I think it's just you know, we all should prioritize one finding good information and kind of
mm,
and not just taking the information for what it is, but understanding where the data is coming from,
mm,
who's retrieving the data, is the data in fact valid? Because you find I've done a handful of research in my day. You'll find just across various different websites, various different resources. Information is subject to vary. Um,
mm,
so again, it's on us to find the proper resources, the resources that are doing data collection correctly, man. Because
mm,
there's nothing I hate more than data that is skewed or data that's not properly collected. Because numbers don't lie, and I think any human will agree with that. Numbers are straightforward. That's why a lot of people like math or hate math. But a lot of people like math just because there's and I'll get to the point here, but a lot of people think that numbers are just straightforward. They are what they are. The interest rates, in such and such. Um, but if the data isn't authentic, if the data isn't collected with in integrity and care, and again, who knows with a lot of these forex websites and they
yeah,
just forex tools, who knows what where they're getting their data from.
yeah.
And so I love using websites like this conference board, they
Right.
collect their own data on top of, you know, collecting data from um, well established and respectively respective entities, such as the Fed, such as the Labor Board, and etc.
How would you compare the statistical data versus in terms of like verifying the information um, in comparison to like, kind of like the articles that we look at, the that speak on bias opinions of, whether gold's going to go up, whether gold's going to go down. Like
Hmm.
we saw this morning, stocks are nervy. You know what I'm saying?
Hmm.
How do you go about verifying those type of sources? Because like you said, numbers are straightforward and it's very straightforward to find if they found those numbers, like you said, authentically, because you can do a few different searches, and if this source is coming out with this number, this source has this number, this source has this number, you can start to kind of like speculate, okay, let's find a really really credible source and let's just stay with that one because all these other ones are not super accurate.
Hmm.
Like how do you go about that, relation to just articles, especially Trading View?
Hmm. 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 Yeah, no, that's a really good question. Um, when it comes to this is definitely different than like here behind me. I have my senior research my senior bio research project I did on climate variability and the expansion of valley fever. So I did what's called a regression analysis. So I'm just finding correlations between I did seven climatic factors and how they impact the spread of valley fever, which is a disease endemic meaning specific to Arizona climate, desert climate. It's a disease that's endemic to Arizona in the Southwest. I'm beginning to expand further than that, which I found out through that research. But in research like that, especially the data is the data. There's not much, real sentiment. I guess the sentiment will come into play, if you tie in like climate change and um, yeah. So that's actually this is actually good. This is actually good. And so with something like bio research, and how it kind of pertains or kind of correlates to what we're doing here, um, and hopefully I'll get to a point here as I work through this. But so I think the numbers in the macro, the numbers in the financial markets, again, the numbers are the numbers, and of course the numbers are up to interpretation, which that's where the just the different companies, the different bureaus, that's where they draw their sentiment from. Just like how I, working through my bio research, I collected the data, then I formed my own sentiment on it, which is valid in its own right. So I'll tie back to just the 100 rocks analogy. It's we have to take time to understand the whole story, and figure out how to just kind of categorize all these different things and understand how it plays into just one story. Um, so I look at the data, I read the articles, and then it's on me to then formulate my own queried opinion. Um, And here, I think it's important to formulate our own opinion and not just take what we read for face value, and take everything into account, if that makes sense.
For sure.
I don't know if I answered your question there, but
You did.
but kind of wanted to tie in my experience on the bio research side, with macro research. About 14 minutes till news, under that 15-minute mark.
4 minutes. No news,
News
no.
higher, treasury yield. Article from MT Newswire came through on XAUSD about 30 minutes ago. Gold moves
Yeah,
higher as treasury yields ease ahead of Wednesday's interest rate decision.
we got about 3 minutes till news.
Oh, I'm tripping. What the heck? What what was I reading? I was
You probably just said
I was
four,
reading
four.
I'm weak. I was reading 646. I'm tripping. 4 minutes. But pushing on three. Yeah, so these photos are right around the corner here. Definitely get some drama here in a sec.
Yeah, and based on what you said too, I wanted to look up the CME Fed Watch tool that I think like me and you were going on this the other day about how they get those interest rate like predictions.
Hmm.
Um, and the CME Fed Watch tool uses real-time price data from
Hmm.
a 30-day Fed funds futures contract.
Hmm.
And that's when I stopped reading because now I have to figure out what futures contracts the Fed holds.
Hmm.
That is interesting to me.
Hmm.
That that is just super interesting. But it says these future contracts allow investors to speculate or hedge, man, based on expected changes in the Federal Reserve interest rate or policy. Um, the speculate or hedge there is super important because even with this 30-day rate, they have no idea what's actually going to happen.
Hmm.
Like it's just there's no way to predict um because like it's either speculation or hedging, which is kind of just protecting their position. You know, as we have about a minute and some change until news here. Um,
Hmm.
do you have some you got some inefficient price action probably in the 2400s. It's about
Yes.
2460 round maybe. Maybe like 24. I know I have some sitting right at about 2430 actually. Yeah, about 2433 to about 2461. Um, I'll probably just because this is going to be a heavy news folder. Um, I'll look to put my stop loss at about 2408
Hmm.
and let that be the determining price
Yeah.
to keep me in this trade. 408. It's right above it would be right above my decision making zone. I'm actually just do 2400 just because that risk is not good.
Hmm.
Um, I'll just do 2400. If I do 2408, I'd be risking about $44. If I do 2400, I'd be risking about 26, which I'm cool with that.
Yeah.
Let's see what we get here. Talk to me, Bears or Bulls? Chicago Bulls. Shout out Chicago.
Chicago Bulls.
We get bullish from consumer confidence, bullish from consumer confidence, bullish from Joe's job openings. I'm holding my Bears move from gold, and I'm gonna potentially be looking to re-enter once we start to move downwards.
Don't you love when that happens? Oh my goodness, don't you love when that happens? When the
And
news
just
drops in
to
your direction, fucking hell.
and bro, just to talk about what we've literally been talking about this whole time,
Hmm.
and understanding time when we're trading, understanding just time as a whole. Even if this started moving bullish,
Hmm.
my sentiment would not change. it just would not change at all.
Yeah.
One thing I really want to emphasize too quickly is I've been analyzing my MACD on higher time frames
Hmm.
just to see how this volume acts, just to see how it acts when those volume bars are really high, which I just deem increased volume,
Hmm.
and when they're really minuscule, which is just the opposite of increased volume. And so, but on the higher time frames, it provides me more confidence towards what that volume is telling me. And how we can understand what I'm saying is, just looking at this 2 hour time frame right now,
Hmm.
if you went back to, Thursday, are you on the chart right now? No, you're not. It's cool.
Hmm.
Um, yeah, just real quick, just go to the I'm looking at the 2 hour specifically. Just go to the 2 hour for me. Um,
DXY
uh, on
or
gold,
gold?
on gold.
2 hour on gold.
This is really, and just thinking about my bearish position. That's kind of
Hmm.
what I'm sitting on right now.
Hmm.
So 2 hour on gold. Um, right at about Thursday, July 25th, we basically started to see our MACD lose sellers volume. Right. So from that point, we start to see buyers volume come in, but we see how increased that buyer's volume is on our MACD at that time when it is moving upwards, right?
Yes.
Exactly, right there. When it is moving upwards. And now this is the 2 hour time frame, so a very strong time frame. And now we have this very minor volume, just super minor, probably a minor. No, I'm just kidding. But super minor volume right now.
Hmm.
And seeing that on the higher time frame provide me so much confidence for my position on a long-term scale as we, blend everything that we've kind of talked about together this entire call. And that's just really breaking down and understanding how much how wide our window of time is when we're in these entries,
Hmm.
and just kind of how I'm utilizing the volume on the MACD on those higher time frames specifically.
Hmm.
It's the only indicator I actually have on my higher time frames, um, just because it's money. So
Yep. Yep. And there's tons of. I have area here. I'm talking about the DXY here, referencing the DXY.
mm,
Um, I have area of inefficient price. There's a little guy sitting at 105.23. Relatively small area of imbalance there. Um, that price could go high. Larger area about 105.419.
mm, mm.
I'd love for price to get up into that next area of inefficient price. But certainly there's liquidity line there at about 105.18, 105.5. There's liquidity to be swept up there on the DXY. So there's
That's the
definitely a lot of near promise, hunting promise, for the dollar specifically on the bullish side, supporting our short position on gold.
I see you have like your DXY. It looks exactly like your normal chart. Why you have it like that?
Um, why do I have it like that? Um, I get
I'm saying that because I actually like it. So I
uh,
want you to kind of because it and because of our structure right now in this 5 minute on the dollar is why I'm actually talking about it. Because
mhm.
we just got a clean green dot. Like our structure as if we were going to enter on this dollar is as clean as on our gold pair. That's why I mentioned it. But
Yeah, I just like because when it comes to just reading volume, reading momentum, I'm so
yeah,
used to reading that on our pairs that we trade.
Mm-hmm.
So I like just having the similarity in the volume and momentum reading by having, it look essentially exactly the same, have the same tools on there. Um, but yeah, no, that's a good question. And I'd really say I don't really have a really profound reason for it. I haven't thought about, making it look any different. It's just it was just logical for me to just make it look exactly the same, I
Yeah.
guess. Uh, yeah.
No, that just goes to show. I think the the validity of how we analyze um it does not change based on the currency. It does not change based on it's as long as it's a chart, and the way we go about our analysis, just how we observe, um, it's pretty consistent, all the way around. I'm speculating a potential
Mhm.
bearish entry here. I kind of actually wanted to keep moving up because it's going to make my stop loss a lot tighter. But if not, I'm going to enter before this 5 minute candle ends. So I think we'll get some volume stepping in on this 5 minute candle.
Mhm. So I'm looking at there's a forex chat. Um, if you go to the right the right side of TradingView, there's a chat. Um, I'm kind of reading through some of these chats. It's kind of interesting. Um, Not something that I'll look at often. Um, when it comes to other people's sentiment, like other retail traders' sentiment, those are things I take very, very lightly. Uh,
Mhm.
as I will always want to have my own sentiment, my own profound sentiment, based on research and not skewed by anybody else's thoughts or opinions. That's just an interesting little thing that I just noticed. It's like a running chat. People comment in it really, really quickly.
That's crazy. I'm gonna go tap in. I just entered a sell.
Like,
I got in at about 2390.35. Um, I'm really gonna. I like all the trades I enter, but I think this one was a beauty.
yeah, I'm with you right there. I'm with you right there. I love when you get an opportunity. I'm not going to enter just because if I enter, I just don't like the risk that I'm in, just given the positions that I'm in. Um, I'm in a point zero 0.01 and a point zero 0.02, right about 2380 and 2326. Um, but given I'm in those two positions, man, I'd love. But here I wanted to specify. I love when you're able to catch that news drop early, and it's not some crazy volatile movement, but the move is going to happen
Yeah,
because two large impactful folders, and then the orange folder from an hour ago or so, both open bullish,
bro.
both drop
Forgot about
bullish.
that one.
So the short position here is just it's really clean from this point. But again, given the skin I already have in the game, I'm gonna sit on my hands here, unfortunately. But I love the short from this point.
Hold on, just checking on my Claire real quick. Yana, hold on. Do you be going in there to wake him up? So you ain't going there to wake him up this morning? Did she come in here to wake you up this morning?
We
Okay,
sleep.
okay, that's all I need. Hold on. Hold on, I got this thought. Y- when you said funny because I'm in a point zero one and a point zero two as well, and that just goes to show managing our
Yes.
risk management.
Yep.
I was really enticed to enter at point zero two. Too. I really was.
Hmm.
Uh,
Yeah, and there's kind of had to there's some querying I've had to do when I think about dynamic risk and what's dynamic and what, but certainly I don't ever want to, get too dynamic if that makes sense. Because again, we're predictors. We're trying to become master predictors. We'll never know exactly what's going to happen. Thus, our risk always has to come into play. We always have to be thinking about that. But I really like the point zero two play on high probability entries right now, given my current account size, which is sitting just below 400 right now. Yeah, but I'm gonna make a post. I'm gonna make my first TikTok post on my trading TikTok. Look at me, I'm in the TikTok now. I'm upset with myself. Um, but yeah, no, this is really I'm gonna document today as day number one of my journey to paying for dental school in a year. Really, uh, my goal is so I'll start dental school, God willing. I get accepted this cycle. I'll start dental school 20 fall 2025. And I have every intention to accomplish my goal of having dental school completely paid for in full um, come August 1 of next year. There's a play I want to make. Some of you guys listening to this might find this interesting. Dental school, med school students, obviously, dental school, med school, will cost you at the end of the day, about a half million, all in all. So that's, housing, living, all that, everything included will cost you about half a mil. It depends on the school, and if you go to an in-state public school, it's going to be cheaper. Here in Arizona, there are no in-state public dental schools. I want to get out of Arizona anyway, but so I'll be an out-of-state student. So my tuition would be higher than any in-state student at the respective school that I go to. But what I'm getting to is, so one of the most quote unquote guaranteed investments that um, loan offers have is, Jesus Christ, excuse me. I try to get a little hiccups. Um, but is medical students and professional graduate students. And so I will, of course, these kids, they have to have money to pay for school. They have to pay the school. So they have to take out hundred thousands of dollars of loans. So the play I want to make is one, having it paid for before I get there, and then taking out, not prob I won't take out a $500,000 loan, but I'd love to do about 200K, about 250K of capital, and invest it into me as a dental school student, and then trade it, and then trade it. Um, that's the play I want to make. As I look at the next 4 to 5 years. Have dental school paid for, so get my account to about 450K. Of course, continue to trade that, but then get an increase in capital via the student loans, and continue to grow that. Wouldn't be possible if my confidence in my not me knowing that I'm going to continue to stay invested in this and continue to learn, so I'll only get better at risk management, get better at scaling in, and get better at my exits, just get better, get more skilled. So come, right now, like, I'm the best place for my extra capital right now here, my extra capital is in my trading account, because I know it's going to grow. Um, so I'm really working on framing my live account in that light, and knowing that it's going to grow over time, because I feel confident and resolved in my development up to this point. Man, the student loan is gonna be the loan offer is just gonna be a prop account for me. But I just get the capital. There's no challenge.
A legit prop account.
Yeah, there's no yeah,
No challenge.
there's no
That's
messed up stuff to deal with.
that's no, I love that approach, bro. And what you were talking about me earlier or yesterday, and I won't mention anything about it, but literally is perfect for just a lot of people will like won't the success is going to come to be true, about it and however you frame that,
Um,
um, and people will want to know how to do that shit because
for sure.
like
No, for
especially
sure.
those people in dental school, man, and they come out or
100%.
medical school with hundred thousands worth of debt that they're paying off until their fingers shrivel, and
Mhm.
that's definitely an ideal way that I would go about it as well if I could.
Yeah, and to protect myself, and you're speaking to risk management as I think about the play, so what I grow my account to, during this next year, I accomplish my goal. I tuck away, let's call it 400 grand. I'll tuck that away and make sure I have that and not touch it. And
Yeah.
so the increase in capital I get from the loan, that's what I'll trade and live off of, knowing
Mm.
that no matter what happens, I already have everything paid for already. So the risk is mitigated, if that makes sense. Um, yeah, yeah, we'll see. When it comes to paying, the student loans, when it comes to dental school, medical school, they're significant and significant enough that it makes people afraid, and a lot of people don't do it right, don't approach it right, and they're stuck, paying minimum payments for the rest of their life. I know a lot of people won't ever pay it off. Like they decide to not ever pay it off. They'll just make the minimum payments, and approach it that way.
How you feel about
But
that way?
I don't want to do that. I
Interest
don't.
rate?
Yeah,
Low
I
low
don't want to do
key.
that. Um, I just want to get it paid for in todos. And all.
So
Because then it's just always something sitting over your head. I never want to be um succumb to any weight of debt. But yeah, yeah, we'll see. We'll see. I'm definitely fortunate. I have, my mentors. I have three main mentors in the field: two oral surgeons, and one general dentist. All three of which have grown very successful practices and all do very well for themselves. Those are people I'll definitely lean on when it comes to this. I know Dr. Hammond and Dr. Wellman specifically. I haven't talked to Dr. Blazek about his involvement in the financial markets, but Dr. Hammond and Dr. Blazek, or Dr. Hammond and Dr. Wellman. Dr. Hammond, an oral surgeon here in the west side of Phoenix. Dr. Wellman, a general dentist here in the west side of Phoenix. Um, Both are involved in the financial markets and utilize the financial markets to not just be sustainable, but to thrive.
mm.
But it's interesting. Their approach is in the stock market, so not forex. Um, but all their goal is just to beat the S&P 500. To
Mm.
do S&P 500 will do about 12 to 13% in a year on average. I'd say 10 to 13% a year on average. So they're trying to get to like that 15, 14, 15, 16 area. Um, and just to see how they've been able to grow their practices, grow their personal assets, their personal lives. Being in this industry and forex, here speaking about forex specifically, 15% would get done in 5 trading days, 5 optimal trading days. That's 5 trading days of 261. So just to think about the potential that lies ahead makes me so excited, and And it really gives me motivation. Can be a relative word, but it really gives me just strong motivation to continue enhancing and developing this skill, because I know it's really just a matter of having the capital, man. It's having the capital. So like something like today, like Marcus, you make that play, this play, you make this short play. There's no reason to push a play, or I guess there's always reason, but you don't need the 60 100 pips. If you're trading an amount of capital that you want to live off of, because I kind of see, in my future, I want to trade and live off that capital, live off the income of that trading account. So you have a $1 million trading account, and that 3%, that 3% weighs really, that's a that's enough to get you by for a week, to say the least. Um, Yeah, I want to continue to diversify. I want to have an account, like I said, that I live off of. I want to have an account that I just continue to grow incrementally, a little bit slower, moderate growth. Um, you know, the project that we're in development now will definitely help with that. I won't get
Oh,
into
yeah.
the specifics on that, but um, I want to diversify as much as possible. Um, in
Yeah.
this space specifically. So not speaking about diversity and investing in the real estate and tapping into the stock market, but in Fork specifically, I want to have diversified accounts, that accomplish a variety of needs.
Yeah, you said it I think like a week ago, when you were talking about the same thing and just how that relates to risk management. Just risk management. You know,
Yeah.
especially when we have our long-term sentiments, maybe that's what we use for our savings account, and we're growing that 0.5% a day.
Right.
Like that's all we're looking to get from our savings account. That's money we're not touching. I
Hmm.
think about Kalea, my little girl. I think about Caden.
Hmm.
Like when Caden's 16, I want him to be able to go buy his car in cash by himself if he wanted. If
Hmm.
he wanted, you know what I'm saying? Or 18, whenever he's able to buy his first car.
Hmm.
And that's in 10 years. So, you know, even if in 2 years I get $1,000 account set up for him and I let that thing sit for 5 years and I just grow it 1% a day.
Hmm.
You know what I'm saying? And just that aspect of it blends right back to what we've been talking about this call is just understanding that time aspect, um, and being able to utilize different aspects of the same market.
Yeah.
Super duper fire,
Super hot.
super hot. What a time to be
Real,
alive.
real man. The golden days. Golden days.
Oh,
Joe and Justin are probably laughing at us calling the golden days like 2008.
I know.
But yeah, I was born in '99. I giving
I
you a break.
know.
But
Hey, at least it wasn't 00.
at
You
least
going
at
from you
least I
going to
made the cut.
zeros?
At least I
Man,
made the cut.
that would have been tough.
At least I made the cut. And I
That
always
would
tell
have
people
been
I was born last century.
last century. Uh, still in my position, both of them, like where they're sitting at still. So, as we're about 5 minutes left, on this call here, I'll probably hang out for a little bit longer if you do, Q. But if not, I'm gonna just hop off. But um, as I just let my position sit for today, I honestly probably will not touch this trade, until we get closer to. I'll wait until New York, until closer to New York close. That's when I'll hope, where I'll want to see it start to move. I would have hoped by then it already moved into profit by the end of the New York session, which is like 2 p.m. today.
Yeah,
Um, I don't mind holding it after it opens. I don't want to be in this trade as we move closer and closer toward this Fed's fund rate announcement tomorrow at 11 a.m.
right.
Um, I don't want to be in it. Um, I'm I'm a risky guy, so I'm okay with being in it, even during this non-farm unemployment and all this other news tomorrow, just because we discovered this very, very important website that Q dropped in the Zoom chat, um, the conference dashboard.org. I'm probably going to turn into somebody that starts to read these type of things, which I never thought I would be, but here we are. And I
Yeah.
actually have found I have a real passion for just understanding the economy, just because I'm starting to understand how it affects me and
Yeah.
my family and my future. Um,
That's a really good point, man. That's a
yeah,
really, really good point, bro. Because when, you know, previous years, recent future, and this is kind of, why I'm starting to kind of shift how I think about politics and my involvement in understanding politics. Because I was definitely in the previous disposition of, my life really isn't going to be impacted that much. Let's hold on. And maybe this is just a naive young man growing into an adult. So I'm sure maybe Justin or Joe can speak to this as far as like our interest in these concepts as we get older
mm,
and as we start to get more capital as we get into our careers and as we get married and as we tie finances together. Like all of this stuff is important, man. And the more we dive into it, the more we research, the better edge we have and the better opportunity we have to capitalize on the information on the stuff that's happening. Because why not? Why not?
I,
We have every right to, as retail traders, the big banks, big corporations, they shouldn't be the only ones capitalizing off this $7 trillion market. Um, and understanding macroeconomics and what's going on globally. I don't think that should just be the job of people in politics, people that work at the bureaus, at the Fed. I really think it'd behoove us to not pay attention to these things and track them over time. And for us, especially in this industry, I
yeah,
feel like it's mandatory. Um,
for sure.
the macro approach, it still is relatively new for us in our platform.
Yes.
So I do want to, emphasize that, this is a really, profound investment that we're making, not just in us personally, but our platform and Bloom. We want to kind of streamline a lot of this macroeconomic stuff in global news events. We want to streamline that to the community and just really have a macro based approach to our trading.
Spot on. However, we can increase our edge
However, we can
is
increase our edge.
however
Yep,
we can increase our edge.
exactly. Yeah, as we approach 7:30, I am gonna hop off here. I work at I have a long closing night. I go in at 4:30. I gotta get some work done today. I got a couple blocks to get through.
Yeah.
To, so I am gonna slide off here. Like I said, I'm in a position at 2380 even and 2376. I'll look to, I want to get this here. I pulled up my 1 hour chart. Would love to see us get down to that 2370 mark. Get down to some of that liquidity down right there at around 70, that 2370. Um, yeah, and I think it's imminent at this point. Like you said, I'll watch it close through this New York session. Um, if substantial progress isn't felt until that point, I'll hold it through market open. Um, when the market opens back up at 3 o'clock, and I'll continue to carry the trade on. Our Finviz opened up this morning at plus 0.65, I believe. Don't quote me on that, but I know it was in the plus zero point 0.6 realm. Now we're sitting at about 0.42, so definitely trajecting towards the bear side on our Finviz reading. Um, so yeah, feeling good about this position. Um, yeah, we'll look to carry this on through the day. Ooh, Mike Marcus, there you
That
go.
thank you for not letting that get away from me. But no, I'm in two positions as well. 2390.35 and 2386.56. Second one I scaled in, just a zero point zero 0.01 lot. Um, but based on all the factors we talked about today, um, on top of just my current market analysis, just my chart, just talking my chart, really like this bearish play. Um, so I won't be naive to not exit this trade if it does approach my stop losses, though. Um, just because I actually did that in the pat in last week on multiple trades and had my worst week of the year. Um, which I love when that happens because what goes down must go up, and you knock me down 9 times, I'm gonna get up 10. Just causes me to get back to my principles, get back to being disciplined, get back to being patient, get back to being um yeah, just those patient, disciplined, and consistent. Just because I felt like I moved away from just who I was naturally. I was taking too many positions, so over trading. I was trading at different times of day, and that just does not root to a formula for success when you're not following your trading plan. It's not that I can't trade during other times of day; it's that I just didn't have ample data, similar to what I do on these market sessions when we trade New York. Um, so taught me a lot about myself as a trader last week, and I'm gonna adjust those mistakes this week, and we'll go from there. We'll go from there.
There. Continue to develop and refine. That's the name of the game, folks.
AKA Bloom.
AKA Bloom. Simple. Simple.
But Joe, Justin, appreciate you guys for hopping on today as well. But yeah,
Yeah.
I think that's a
I'm back
wrap.
at it same time, same place tomorrow. I'm closing tonight, so Marcus, I'll be on with you back half of the call tomorrow.
But
Um, yeah, we'll continue like you said, we'll continue to bloom. Together we
yeah,
bloom.
together.
Super easy. Justin Joe, appreciate you
Peace.
guys. This end of the stream. We'll see you guys.